You are listening to chartingwealth.com for Tuesday, the 9th of June, 2015. It is great to have you with us as we help you chart the markets. Have you always wanted to know how the stock market worked and why? Well, here at chartingwealth.com, we make it easy because every day we track the total market, the S&P 500, the NASDAQ 100, and gold. We show you what's happening and why with no hype. Just sit back, relax, and learn how the markets really work and figure out how to make your millions. Now, we are not a stock calling service. We are not a financial advisory firm. Our opinions are our own, and they're no way to be taken as financial advice of any kind whatsoever. Let's jump right into the market. IYY. This is the total market. It's an index fund, an exchange-traded fund that tracks the entire market, all the stocks. And you can see if you're listening to us, I will tell you what you're seeing. We are seeing a large move down on the 2-day chart where each candle represents 2 days, and I'm counting 1, 2, 3, 4, 5, 6, 7. So about actually more than 2 weeks because there's only 5 days to a stock market week. We've got a lot of movement over a couple of weeks down. The market crossed over going down back between the 28th and the 28th of May and the 1st of June on our 2-day chart on the MACD. That's the moving average convergence divergence. A couple of days later, the derivative oscillator kicked over moving down, and the market has been shooting down significantly since then. We saw it coming, we talked about it, and we have been tracking it. Now, if you've been listening to the talking heads on TV, they may have been saying different things, but here's what's been happening. Now, if you look on the 4-hour chart, which is the smaller chart, the half-day chart, you can see where the market kicked over a little bit earlier. The smaller chart typically turns before the big chart, but it doesn't always turn as strongly. It kicked over between the 22nd and the 26th of May and has been going down since then. A little bit of upticks, but that's the reason that we don't pay full attention to the 4-hour chart. It's the big chart that we let lead us. But we can see that it has been tracking down. In fact, over the last day, the 8th, it was a pretty significant down day. It was 0.62%, and again, that's just a little over 0.5% down. And that is where our total market has gone. Now we're going to range back out to the 2-day chart, and we're going to now go to the SPY, which is Standard & Poor's 500. It was down 0.61% for the day. We've been tracking it also. We have a 2-day trend line that we've been running for the last 6 days or so. It is down significantly, and the markets are down. If we track back to the 4-hour chart, you will also see that it has been moving down significantly since it crossed over going down about the same time that the IYY, the total market, did. Right afterwards on the 4-day chart, the derivative oscillator kicked over too, and it's continued to move down substantially, going from somewhere in the neighborhood of $13 all the way down to about 208, almost 209. So some significant down movement in the S&P 500. That's what the SPY tracks. So continued down movements on both. Both of those charts are below the 2-day trend lines. Down movements on the large chart and the small chart. So those are confirmed down movements on both. Let's look at what the Qs has been doing. I'm going to range back out to the 2-day chart. You can see that the Qs was going up through the 1st of June. Then we had some trepidation, some real questions with what we call a doji. Looks like a cross on the charts where there was as much up movement as down movement, means a lot of indecision. And the charts immediately kicked over after that between the 3rd and the 5th. We saw a crossing in the 2-day chart, and it's been significant down movement since then. Today, the Qs were down 1.02%. So again, we've seen significant down movement there. If we go back to the 4-hour chart, excuse me, you will see that it was significantly down today, well below the 2-day trend line. Derivative oscillator heating up even more. Crossed over on the 4-hour chart there on the morning of the 29th, moving down, 29th of May, moving down since then. So all three of our indexes, the total chart, The S&P 500 and the NASDAQ 100, which is the Qs, all down significantly on both the 2-day, the 4-hour, and the MACDs and the derivative oscillators. So they are down and have been heading down for the last few days. Now, we're going to range back out on our 2-day chart, and we're going to take a look at gold. See what gold has been doing. Well, if you look at the 2-day chart, you can see we have a nice trend line over 1, 2, 3, 4, 5, 6, 7. Been below the trend on 7 2-day candles, which are 14 days altogether, continue to be below that trend line moving down. Gold crossed over on the big chart between the 26th and the 28th and has continued down since then and has continued below the 2-day trend line. We love our 2-day trend line. Let's range out and see what gold is doing on the 4-hour chart. Gold actually for the day finished up 0.29%. However, we pay a lot of attention to our MACD and, of course, our bigger chart, but we do see where gold crossed over again going down. It had crossed over back between the 19th and the 20th of May, started to range up a little bit, pushing through, and then crossed back over pretty firmly on the 3rd of June. It has continued down. Derivative oscillator heated up again around the 4th of June, but today was a bit of an up day. Still well below the 2-day trend line and is not crossed over on the MACD going up, and the derivative oscillator is negative. So we are still showing negative on the 2-day and the 4-hour chart on gold. So basically everything we are looking at are in confirmed down trends. That is where the market is right now. If you, of course, are trading in inverse funds, you're probably excited about that. If you have been in gold, in the SPY, Standard & Poor's 500, the total market, or the NASDAQ 100. Hopefully you close those positions. You're waiting for things to bottom out, and then you'll buy again and ride it up. Hope that you have a great day trading in the market on Tuesday the 9th. Thanks so much for listening to us. Please be sure to follow us on Facebook and Twitter. We love to hear from you. We love your comments. We love to know what your needs are. We'll try to do all we can to supply more information. God bless you. We wish you the best in trading and investing.